Good evening, ladies and gentlemen. Today is the 15th of July, weekly expiry. My initial trade in the day was definitely on the aggressive side, and I took on some call credit at really low prices. And as we all know, we had one big short covering during the day, pushing us over the lifetime high, and the calls are really burnt. After my view once again more or less went wrong, I really was expecting a rejection at the 15,900 level, especially at least the way risk was being priced. It's almost like market is just not willing to accept breaking 15,900. But anyway, that happened, and at that point I decided it's time to completely take risk off on the position. I was down by how much I was willing to give up for the day, and at that point I just decided to take off risk on both sides, and more or less from there it was smooth sailing for the rest of the day. It was no strong intention that I have to close in the green or anything. I would have been happy to close in the red if it went against me, but yeah, that's one good thing about being on the credit side, that even when you do go wrong, you can more or less manage it without taking on too much risk, and come out the other side without getting too burnt. So it was one of those expiries. Really, at the end of the day, I think I basically just covered charges and maybe a little bit more than that. And I hope you had a good expiry. I hope you didn't get stuck in any of the short covering. And I think my bigger fear after the short covering was a potential unwinding of the longs, which is why I was so risk off. I did not want to stand in the way of first getting burnt on the upside and then getting burnt on the downside. Cumulatively, I think this 15,900 call option has done a lot of damage to me. I mean, on its own has done a lot of damage to me in the past 2-3 days, and yeah, it's just a joke. Never mind that. But thank you so much for watching. I hope you had a good expiry. I'm working from my room currently because my wife is a little under the weather, and I might or might not be trading tomorrow. I will keep you posted on Twitter. Thank you so much for watching, and if you want my trade book and stuff like that, because I get a lot of questions about that, it's available on the Telegram channel. You can check that out. Every single day that I've traded, my entire trade log is available on the Telegram. Thank you for watching. Have a great day. Bye-bye.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:55, and basically we've opened gapped up and we continues to see some strength. But initially in the first 15-20 minutes, we saw writing of the 15,900 call, which now has 75 lakh cumulative open interest, 76 lakh. We're seeing immense strength at the 15,800 put, which has 1.1 crore of open interest. Now, my initial plan was to short the 15,900 call and 15,800 put, which is what I did. But into the continued up move, despite expecting 15,900 to be the upper end of the range, this expanded till about 22, 23. And at that point, it was almost at the money. It was at the money. And it was trading at 23. So there would be re-rating of calls, even if we made a 5 to 10 point up move from there. And it just seemed far too dangerous. So in order to defend against that and also take a contrary play, I had moved up my 15,800 puts to 15,850, so that whatever sudden spike would be there would be compensated by the fall off in the 15,850 put. Regardless though, at that point it just felt far too high risk, in considering that I'm working from my room. My wife is keeping a little unwell, so I'm working from my room. It would be just too much of a headache to keep balancing back and forth. So instead what I've done is moved my puts back to 15,800, which has tremendous amount of strength given current data, and I've moved it to the 15,950, which seems very, very unlikely given the pricing of the 15,900 call, and the credit in the 15,800 put will be enough to compensate for whatever slight expansions take place as we keep testing around 15,900. I'm not expecting some, so basically the entire thing is I'm not expecting some big up move from 15,900, at least not on the expiry day. So that being the case, we'll keep you posted. The time is almost 10 o'clock, and yeah, so far into the up move, some amount of calls got covered, and some amount of re-rating happened between the pricing of puts and calls, but not much else. Currently, this spread has a net credit of slightly above 12 points, given that hedges are very expensive. When people are aggressively shorting puts, then OTM puts become quite expensive, where the demand for them goes up big time in order to hedge whatever short puts are being built into the system. So yeah, for now, given the pricing of both the 15850 as well as 15900 straddles, these strikes are more or less fair enough in terms of their pricing. If the straddles are pricing in about 70 points in either direction, I think this position should be relatively manageable. And the time is a little more than 10 o'clock. The 15850, 15900 strangle continues to trade just like half a point under 40. It's held the same value for a long time now. And this basically is giving us 15800 on the downside, 15950 on the upside. And that is our position, which really hasn't changed at all in the past half an hour. It's been exactly the same. My Bank Nifty weekly call is going to expire. This is the covered call position. Right, so this is going to expire today. So whatever has to be booked will be booked today, and the remainder will be open. And once again, I've taken half the quantity at 36,500. On Monday, if we have a gap up, then I will cover all 250 shares. I'll add to this position. If not, if you open flat or if you open down, then we'll have slightly different course of action. But yeah, since our monthly call is in the money and it matches our future on a 1:1 basis till about 35,000 downside, which is about 750 points downside, really don't have much concern, because more or less whatever damage is taken by the future, which is now sitting in good profit, will be amply compensated by the call option. We'll keep you posted. Time is 10:20, and so far from what is visible, it's just that a lot of support has built up at this 15800 put option, and that there isn't really much unwinding of the 15900 call option. There's in fact quite strong addition, and from the overall OI, yeah, so you have 15900 straddles being added, 15800 immense put writing happening. There is call writing happening at 15800 above, but that can also be compensated by the 16,000 puts that are being written. It can be like an inverted triangle situation. Okay, there's some major tug of war situation happening here. So you see, there's a steady rise in the 15900 call option. Slowly but steadily, it's gaining in value. At the same time, 15800 put option is also gaining, but almost 10 lakh OI added in the past 15 minutes, and despite the gap up, there's been a 51% increase in open interest since morning versus yesterday. So what is going to happen is there's going to be a big fight around this, and this will go one of two ways. Either the shorts will start to cover or the longs will start to unwind. So it's a very tricky situation. I don't like being around such situations. So I've kept my distance at the 15950, which should be relatively safe. And right now, since we are all doing this fight on the upside, the 15800 put is basically inconspicuous, but one is to keep in mind that the hedge for it is also costing 2.3, which means that, like, realistically speaking, the credit is only about $6 from the put, and the credit on the call side is also about $6. So that way, premium wise, we have equal premium exposure on either direction, but not a lot is, and as long as this tug of war keeps going on, there's really not much of like a fall off in prices, at least as far as the 150-200 range is concerned, and we continue to remain exactly there. So we'll keep you posted. The thing is, if there is a short covering though and we get pushed to a new lifetime high, these calls which were far above the lifetime high will start to rocket, and I'll have to get out of them quite quickly. So my plan will be, in case these do expand to something like 11, 12, then I'll have to very quickly move my puts up to 15850, and yeah, also have a stop loss on the call. We'll keep you posted. Time is 10:40. Okay, so basically settling of that argument is done. We had a massive explosion on the 15900 call from short covering, and that also exploded the 15950 call. And in order to deal with that and bring in more credit from the put side, I've moved up my puts to 15850, and yeah, now each leg has about 12 points in it, and the position sits on a credit of 21 points. Now if we continue to head higher, and basically there is starts to be an imbalance where these expand to something like 17, 18, and At that point, these will be trading at something like 8, and I will just have to cut out of this and sell the 16,000 call, which should be available for about 6 to 7, I'm guessing, at that point. Otherwise, this is actually quite all right. I am down about 3 points, which, considering all said and done, is perfectly all right, because at the end of the day, this really won't uh, matter too much, as long as I don't have like a big sell off from here. So that is going to be the bigger concern. The up move is lesser of a concern. I'll keep you posted. Time is 10:49, and considering today that my ideal target will be somewhere between 15 to 20 points, I will be allowing myself to take, in case I do have to book a loss, I'll book a loss of somewhere close to uh, 8 to 10 points, but nothing more than that. Okay, big short covering up move. Absolutely exploded these calls. Even the 15,950, they went up considerably. So when they started going up around 17, 18, we started cutting out of them and selling the 16,000 call instead. And by the time I was done doing that, I think the highest I paid was close to 20. A ridiculously high price, but in a short covering, you don't know where it stops, and if you have to get out at a point, most likely everybody else wants to get out at the same point, you end up paying quite a lot for it. So regardless, this now puts me in a 7 point deficit, and I can afford to take another 3 points from here, based on the expiry risk management that I would have in place. At this point, this 16,000 call, if short covering goes all the way till like 16,000, then there's just nothing I can do. I'll have to take a stop loss and exit, and at that point just try to sell super deep OTM, which has value. Super deep OTM strikes do have value. This 1 rupee 55 pice and the 16,100 call, and there is 3 rupees in the 15,700, which now is like 250 points OTM. So I'll have to do stuff like that in order to just do the penny expiry trade. But yeah, whatever 3 points I would give up into that up move will be taken care of by that. And the real thing is, if there is now some big profit booking wave, and I mean, you have to look at all scenarios. If we have a wave of profit booking where we break the day's low, that's going to lead some insane unwinding, because if you see right now 5,900 put is trading for 17. So yeah, that if there is some kind of put unwinding, that would be the real danger, getting out on the put side. So regardless, about 3 points is what I can give up from here technically, and from what my strangle currently has, which is little bit more than 14, and my hedges, which are costing me 3.5, that's still 10.5 points that I can capture. It's not like I have to capture 10.5 points and close in the green, but it's relatively safe at this point of time, this position. So with a 3 point stop loss trail, we'll have to see where things go from here. We'll keep you posted. Time is 11:16, and yeah, quite an intense expiry this time. Short covering right into the open, and interestingly, it's Bank Nifty that is doing all the legwork. So what is happening now is my weekly Bank Nifty 36,000 call, which is part of my positional trade. Now it is starting to gain in value. If this goes over 100, I will just exit this and roll forward this 125 quantity to wherever I'm getting 100 rupees in the next week's expiry. So how that would work is, right now I'm short against this future. I'm short the monthly calls as it is. I'm short this week, today expiring 36 thousand call, and 36,500 of next week. Currently there's 141 rupees. If this goes to 100, you can fairly assume this would have gone to around 160, 170 at least. And if this gone to 160, 170, then something like the 36,800, 36,900 will have about 100 points in it. So that's what I will sell 125 quantity of if this expands to 100. We'll keep you posted. Been quite an intense first half. As long as the second half isn't like a reversal, a complete reversal, should be all right. But even if it is, then I'll just exit appropriately. Okay, I'm going to be temporarily taking risk off on the puts by buying back the 15,850 and selling the 15,800. Reason for this is there's been a little bit of a call side IV cool off, and now if we have a downward move from here, it'll put me in a really bad situation where the puts will expand, and then I'll have to take the 5950 call credit at a very subbar pricing of 12. So taken about, plans to take 40% of the quantity lower. If it expands beyond 10, I'll take the entire quantity off. Okay, the time is 1:46, and more or less what happened was, after risking off on my puts, once again we had an up move where there was a call side heavy spike. This went to around 6.5 second time, and I had to move up my puts. At that point, I moved to the 15,850 put, which was trading at 6. On the reversal, it went to 8. I took the exit. So all of this is available in my order book. You can go through that. So took the exit from there. Once again, risked off on the puts, because at this point, the way I see it is, my trade went wrong the moment this happened. This I was not anticipating, and even if this was slightly there, I didn't anticipate I will make an up move and hold. The moment my 15,950 calls exploded the way they did from 6 to 20, that itself was the point where the trade was basically lost at that point. Now the idea is, there's nothing left here. Now both put together, my credit is about 3 rupees 50 paisa, and my hedges have 1 rupee, so 2 rupee 50 paisa is what I have. That'll put me, even if I close in this range, at a loss of 25,000. I have no fantasies that I have to close in the green or anything like that. Absolutely no such thing. If I have to close in the negative, I'm happy to close in the negative. Right now, plan is, if we break 15,950 on the upside, break 950 and hold there for some time, then I will take my 15,800 puts and move them all to 15,850 and maybe even 15,900. That's on the cards. And on the downside, if we break 15,900, then I'll take all of my 16,000 puts and short the 15,950. So until then, absolutely no intention to do anything to this trade. Into the averaging, if we're still holding the same 15,900 950 range, then I will take on maybe at least another point of additional credit into averaging. That is the plan for now. Okay, there's 30 minutes to go for averaging. The 15,950 short straddle is trading at about 27, I think. Yeah, about 27.28 with half an hour to go for averaging. That is, as it is terribly low pricing, but it's in line with, I guess, what the Y would want. And yeah, my current strangle, my moved up the puts when we start testing 15,950, just to take in a little additional puts I create. The way I see this expiring is either the 15,950 straddle goes to 0, or we make a down move from here of 50 points. I'm not expecting that. I don't think there's really any value in the 15,950 straddle anymore. Currently, considering where it is trading, it's just yeah, it's just one of those trades that can work out really well or go really wrong. Regardless, I'm going to wait till averaging. I have one option now, which is to take the 15,900 put credit, which still has 2.5 rupees in it, but I'm holding off on that for now. Okay, so one thing to observe is that the 15,900 call has no time value, and in fact has negative time value. So that once again shows a little bit of the bias of the market, that the 15,900 call continues to always trade at or below whatever the spot is actually pricing it to settle, which is exactly why into averaging I'm potentially thinking of either a 15,950 close or a dip from 15,950. Doesn't seem to be the case. If you see this times 2 3 point difference between the two, and yeah, that's more or less where I am at currently. Short position has 1 rupee 40 paisa in it, and there's 60 paisa in the long position, so about 80 paisa. And the only thing will be in the break into averaging, will I be able to collect? Maybe if there's a down move, I'll be able to collect the 15,950 call credit, which should give me at least a rupee if there is a down move. And in case there isn't one, then we'll be collecting the 15,900 put option credit. So yeah, it'll be basically an entire day spent with no real difference except for what has been gained on the covered call. This 36,000 bank nifty most likely going to 0. I will now just set an SLM order on this in case there's some big up move into averaging. So we'll set this at 28. And in case it does trigger, then I will sell something which is worth 50 bucks in the next expiry. So I'll be collecting more than what I've given up. So this will get booked today. This is already open. It's a weekly cover for the covered call. and it's covering only half the quantity in the weekly. Yeah, we'll keep you posted. As of now, really not much left. And yeah, I guess it's a day that went wrong here. This was so generally I take high probability trades with low reward potential. When I mean, just because the probability of something is low doesn't necessarily mean that it won't happen. So it did happen, and that kind of completely threw me off. And at different points, I just kept bleeding a few points here and there for risk management. But this is what basically threw the trade off. And now the idea is we will be more or less closing at break even, and it's an all right outcome. You cannot churn every expiry for 2, 3, 4%. It's just not possible. And the intent here from the beginning, from the morning, was never to take on any additional trade. So 17 minutes to go for averaging, and yeah, the 15,950 is now pricing in about 24, 25. Okay, we're into averaging, and what I've done is, since we have neither made an up move nor made a down move, I have moved both my put to 15,900 and call to 15,950, and I did it at basically absolutely no prices, zero prices, roughly around 75 paisa each, just to collect a little bit additional credit, because now that we have gotten into averaging and we are holding almost at the center, it's a great time to move in closer with both sides, which have. So right now, the way I look at this, I've already given up the hedge, so the hedges don't really matter much at all. This is trading at 1 rupee 30 paisa, 1 rupee 20 paisa, 1 rupee 15. If it expands to 2, I take the exit. And if it doesn't, which I mean, all as far as probability concerned, is very close to impossible, because into averaging, we'll either need this 15,900 call to go to 50 to for this call to be worth even 1 rupee, or we need this 15,950 put trading at 27 to go to 50 for this put to be of any value. So if neither of those conditions happen, roughly, let us say now I'm sitting on 1 rupee 90 paisa minus my hedges, which are partly 20 paisa and partly 10 paisa. It's still half a point, and that should take care of whatever charges that I incurred during this entire day. So more or less going to consider this a break-even day. And yeah, I think what happened is, into the up move, I was far too scared, so twice having to risk off on the 15,850 puts, and then risk on it like a very bad price was not great. The initial up move as well was not something I was factoring in, that short covering move. So but all said and done, I think it's an all right outcome. And yeah, it's one of those days where the trade just didn't work in your favor. I'll keep you posted. We're 5 minutes into averaging, and so far it doesn't really look like anything is going to happen. Oh, also, just for people who ask me about this, how do I know I'll get out at 2 rupees? Maybe instead of 2, I might get out at 2.5 if the slippage 2.5, maybe even 3. But I have my orders set up here, either to cut partly or to dump at any point half to an entire position. Towards the end, since I bought this position back, I bought more of it and was able to increase my sizing with the whole margin benefit of 50 points or whatnot. But yeah, that's more or less exactly how it will play out. If I start seeing this expand, and now it is trading at something like 55, 60 paisa. If it start expanding to something like 1 rupee 20 paisa again, which is really now at this point not a possibility, then I will just be using these orders, each which will dump, which will buy about 25,000 quantity to get me out. Okay, we're 15 minutes into averaging. My short position has 35 paisa in it. Just to give you a little context of what will be needed for either of them to have value. The average now we can assume is more or less 15,925 based on the price of this call. We need to spend the next 15 minutes, like instantly we need to jump either to 15,975 or 15,875 and spend their time for the next 15 minutes for then to start thinking of having value in either of these options. So they're not going to have any value. My hedge is also not going to have any value. I should be most likely buying this spread back for something like 20 paisa, more or less what it is now. I'll try placing limit orders now and see if I'm able to get it at 10 paisa. If not, it will auto square up. See if I get it for 5 paisa. It's trading at 5 paisa-ish, but yeah, I don't see that triggering. Anyway, yeah, at this point today, this position will also get booked. I'm not going to square it off, save on the brokerage. Now at 20 paisa, and yeah, that should be the end of the trading day. Okay, there's a minute to go for auto square off. I've set these orders at 5 paisa. They're not executing. I will change them to yeah, it's not letting me do that. It's canceling all my orders and will manually push me out. And just like that, yeah, it takes a lot of orders to get out of position. And just like that, we're done for the day. Don't think we'll be able to exit this, but fair enough. Done for the day. Thank you so much for watching. I don't think there'll be much to take away from this expiry. It's just that trade went against me right off the bat, and from there I decided I was no longer in the expiry to maximize gains. Just get away with what I can. I think more or less that is a summary of my trading style. It is I will take some amount of risk, but if it goes against me at that point, I'm just there to take what I can. So thank you so much for watching. I will catch you tomorrow. I might or might not be trading tomorrow. I will let you know in the morning on Twitter. Have a great day. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.